everyone, did you see what just happened in crypto? The market went crazy. We are talking $9.5 billion liquidated in less than a day. Bitcoin dropped 12%, Ethereum 18%, and altcoins like Solana, XRP, Dogecoin, even Cardano took massive hits. But here is the interesting part. ICP actually bounced back pretty quickly. Traders who held on or bought the dip were in for a surprise. Before we discuss about this topic, if you enjoyed these updates and want to support Ledger Life, the donation details are right down in the description. It really helps us keep bringing you this coverage. Now let's get back to the story. The crypto market just went through one of its most brutal sell-offs in history, triggered not by a hack or a protocol failure, but by a political announcement. The President Donald Trump shocked markets when he confirmed a 100% tariff on all Chinese imports. Within 24 hours, more than $9.5 billion in crypto positions were liquidated, wiping out over 1.4 million traders in a single day. Bitcoin dropped 12%, plunging from $121,000 to $105,896 before clawing its way back above $114,000. Ethereum took a heavier fall, down 18% to $3,574, while altcoins like Solana, XRP, Dogecoin, and Cardano sank anywhere between 25% and 45%. And how about the largest single liquidation? An $87.5 million Bitcoin long on HTX. Binance, Bybit, OKX, and HTX also billions wiped off their open interest. Hyperliquid alone faced over $400 million in forced sales. Analysts say the speed and intensity of the crash eclipsed even FTX collapse and the COVID-era turmoil. And it all started the day before when China imposed new restrictions on rare earth exports, the materials that power everything from EV batteries to smartphones. These elements account for about 70% of global supply. Traders saw it as the first shot in a new trade war. Then came Trump's confirmation of massive new tariffs starting 1st November plus restrictions on software exports. The shockwaves hit every corner of finance. The S&P 500 lost $700 billion in value in a single session, closing down 2.7%. The Nasdaq 100 shed 3.5%. Oil prices dropped more than 4%, and the US dollar weakened as traders scrambled to assess exposure. And of course, the spillover hit crypto hard. But here is where things got interesting. While Bitcoin and Ethereum struggled, ICP held up far better than expected. After dipping briefly, ICP almost fully recovered within hours. It's a rare show of strength in an otherwise red market. Traders took notice, calling it one of the cleanest V-shaped recoveries in the top 50 tokens. For anyone watching closely, this was more than luck. It reflected growing confidence in the internet computer's on-chain economy and developer traction. When liquidity floods back into the market, projects with working ecosystems tend to bounce first. This time, it was ICP. Now, it wasn't all calm for ICP traders. The token had its own wild ride this week. At one point, ICP plunged over 50% intraday from around $4.50 to just $2 before recovering and stabilizing about $3. But the data told a different story beneath the volatility. Exchange balances fell from 54.6 million to 52.9 million ICP. That's nearly 1.7 million ICP pulled off exchanges, which typically signals buy the dip demand. When traders move tokens off exchanges during a crash, it means one thing: they are holding for the long term. So while the candles looked chaotic, the behavior underneath was steady accumulation. ICP's rebound plus that outflow pattern suggests the community is no longer purely speculative. There is conviction there, and it's growing. And speaking of growth, let's talk about what's next on ICP's developer side. Caffeine is preparing to roll out Phase 3 on 15th October, and this update could reshape how developers scale live apps on the internet computer. The biggest change is developers can now enable pay for usage. It's a system that lets apps pay dynamically for the compute and storage they actually consume, instead of locking up huge cycle balances in advance. It's a smarter, more flexible model that is ideal for projects that grow fast or experience usage spikes. Phase 3 also introduces ICP blob storage. It's a breakthrough for managing large amounts of data cheaply and immutably. Here is the cost comparison. Blob storage comes in at around $0.025 per gigabyte versus roughly $5 per gigabyte for traditional canister memory. That's a 200-fold cost reduction. It's the kind of difference that makes new categories of decentralized apps possible, from photo galleries to personal cloud drives and on-chain media archives. By pairing scalable pay-for-usage with low-cost blob storage, Caffeine is effectively giving developers a toolkit to build at internet scale without centralized infrastructure builds. Phase 3 is all about sustainability and reach, where it keeps ICP apps lean, fast, and affordable as they grow. The rollout goes live 15th October, so expect to see new dApps launching with these features soon after. While Caffeine focuses on scaling, DFINITY's developer team has quietly been making coding smoother with a new release, the ICP SDK bindgen package. It's a part of the broader ICP JS SDK toolkit, and it's built for one purpose: to generate modern TypeScript bindings for candid canister interfaces. If you are a developer, that basically means you can interact with your canisters using clean, auto-generated TypeScript. No manual setup, no repetitive typing. The tool works in three ways: a CLI or command line interface, a white plugin, and a programmatic library for custom scripts. This flexibility lets developers fit bindgen into any workflow, whether it's automated builds or custom scripts in complex projects. It's still in early release, which means breaking changes could appear before version 1. But even in this stage, it's a huge time saver. Another big plus is it's fully compatible with ICP SDK core, making the generated bindings clean and type-safe for modern TypeScript environments. For teams used to older tools like DFX Generate or DIDC, the transition is simple. DFINITY's documentation clearly explains how to migrate, potentially saving hours of setup time across multi-canister projects. The move shows how ICP is evolving to meet developers where they already are in the JavaScript and TypeScript world. DFINITY also hinted that future versions could integrate with build systems like Webpack and Rollup, and even target Azure, opening the door for more Web 2 to Web 3 crossover. Developers can check out the guides and documents at JS ICP Builds bindgen or share feedback directly on GitHub. And the takeaway is ICP's developer ecosystem is becoming cleaner, faster, and easier to onboard. That's exactly what drives adoption over the long term. And finally, let's turn to something new and experimental. Blockminer's upcoming token launch mechanism, which could set a new standard for fairness and liquidity in token distribution. The system runs through 4 distinct stages that are pre-mining, ignition, active mining, and completion, all executed fully on-chain. During pre-mining, participants stage their rigs by committing resources in advance, locking in energy for the full mining duration. Early participants get rewarded from the pre-miner pool, which is 10% of the total supply. Once 1,000 rigs are committed, ignition begins. All rigs activate simultaneously, and the mining curve starts running over 14 days. During this period, block rewards increase gradually, encouraging participation and liquidity growth. At ignition, our baseline liquidity pool is also seeded, where 20% of total token supply plus the Bitcoin raised from energy contributions. As more rigs join, the pool deepens automatically. It's a design built on 4 ideas: equal treatment for all rigs, no insider allocations, liquidity from day one, compounding momentum during the mining window, transparent, easy to track mechanics. Blockminer compares it to a market launch cycle where pre-mining acts like a roadshow, ignition is the live debut, and the 14-day mining phase works like a book build. After completion, the market takes over. The system promises a cleaner start, deeper liquidity, and less need for community organized liquidity pools. Importantly, it doesn't replace existing models like POP or swap. It simply offers a faster, fully on chain variant. The ignition event goes live next week, and the team says it's their strongest and fairest launch structure yet. And this is built directly on Bitcoin, but inspired by the open principles of ICP's decentralized design ethos. So, from market meltdowns to developer tools, from token innovation to scaling infrastructure, the theme this week is resilience. While macro shocks rattled everything from Wall Street to Web3, the internet computer ecosystem didn't just survive, it built, launched, and moved forward. That's the difference between a project waiting for the next bull run and one quietly constructing the next generation of decentralized applications. If you found this update useful, hit like, share it with your community, and don't forget to subscribe for more updates. And as always, you can support Ledger Live through the donation details in the description. Until next time, stay decentralized, stay informed.